I wouldn't be surprised if we have a much bigger move. There we go. Now we're streaming live on youtube.com/financial wars. Okay, couple things here. Just want to bring up a highlight. So this is VIX expiration, FOMC triple witching. We're getting one of the larger expirations we've seen in a while. We have vol compression that's been happening for the last couple of months. VIX expiration, FOMC converging with Wednesday. So we have a VIX expiration on the 17th with FOMC. This will mark a floor for implied volatility. I think volatility probably jumps up, through the Fed. Friday's triple witching, which is 919. That means you have index options, futures options, and stock options. Represents a significant market event given unprecedented scale of options. Nearly $1.1 trillion in SPX Delta notional expiring on Friday. Concentration being with dealer hedges. Okay. Particularly a call heavy expiration with 11-to-1 ratio of calls to puts. It just shows everyone's call heavy. Now, that could also mean long calls. That could mean short calls. That could be lots of selling calls. That could be lots of long calls. It doesn't matter. But that's a huge ratio leaning towards calls. Combinations, massive expiration immediately following FOMC could create significant flow-driven volatility. So current dealer gamma structure suggests a break below 6,500 next week could trigger negative gamma territory. I've kept saying this, like 6,500 was a JPM collar trade. Now it's offering support. If that support breaks, if we flip to a negative gamma environment, that means more volatility, higher volatility, more volatility. So, and again, 6,500 is not that far away. I keep talking about this 50-day moving average. So just write this down. Okay. Write this down. 6,500. If we break below 6,500, let me use a straight line here. If we break below 6,500, I just want us to be prepared for a reasonable correction. Okay. Because if we get from positive gamma to negative gamma, this level gets hit. This level becomes the target. This 100 period moving average becomes a target. The percentage dip become a target, and volatility likely spikes higher. The VIX at 1571. A spike up into the 20s would not be unheard of. We haven't really had a big VIX move for a while, right? The last time we had a decent flush up was 22 VIX, and that was back in early August. That's it. This thing has barely flared to the upside, let alone, offers a real dip. So if we have a run this week into the 20s again, I don't know if that's just a little short-term ventilation with higher volatility, if vol suppresses again, or if we break that 20 handle to go from 20, 25, 20 to 30, and maybe give the market more of one of these scares. This was December 2024. We had a 6 to 8% correction last year. The Fed picked it right back up because there was another big vol compression or vol suppression right there. But again, in February, March, things started to pick up. So, VIX is going to be interesting. It's not something that you read technically. It's like, oh, is this a falling wedge on VIX? No, not really. It's just there's a floor. And if we're going to go higher volatility, does it actually go up into the 20s? That's a big question mark. But I'm just telling you, write down 6,500. Okay, if we break below that, we're likely heading into some of those bigger corrective levels that I've talked about. Okay, this is also why in waterfall income, we're playing strategy 2. This is why we've been patiently waiting to add some positions on strategy 1. For double ups, I haven't seen a good gamma level to pin prices to every single day. In fact, it's been, far out of the money and almost too far out of the money where I'm not taking those trades. So I'm looking to see where things are pinned. Let me bring up some of my gamma levels here with dynamic trend and see what lines up today. So in my gamma levels here, 66.75. That's a big one, and that's a long ways away. We're talking about a move today that is 59 to 60 points higher with a market maker move of plus 20, plus or minus 20. So we'd have to go way, way, way beyond this. And I want to see what I've got lined up for 0 day, because moving this down here, going pre-market, I don't see, I see 75, but I see like the more near term is 66.30. So that 75 seems to be a little tough to reach, in my opinion. If we're going to open up and gap higher, keep an eye on this. But yeah, I don't know. I think that today it's a tough one because this to me pre-market seems like it's going to be very difficult to stretch to 66.75. That would be one heck of a run-up move prior to FOMC. So I don't want to get just I don't want to assume it's going to be directional today because it's still, from the market maker's perspective, a plus minus 21 points. That shouldn't be crazy directional, you know? And at the same time, if I'm doing a daily profit play where I'm selling calls and I'm selling puts and I'm doing a two-sided trade, 21 points away to get paid on premium is not that high. This market could easily go 30, 40 points like it did last Friday or last Thursday when it was up, 40, 50 points. So I mean, I'll set levels. I'll look at the VIX level. I'll sell levels. It's probably going to be set a 5 wide spread. Try to get filled for a buck, and try to get some of these highs. Yeah, we're just fading a little bit lower. Here's my reference point. We're going to be open up in about 10 minutes. I don't think we go too much higher than probably 70, 75, or 80 as far as selling calls. But that's a long ways away from current price. So let's see. Maybe the better move is if we gap higher. I mean, again, even for a out of the money put spread, plus or minus 21 points. I mean, I don't want to necessarily go only 20 to 25, 30 points lower either. Because if we're gapping high, running into resistance, or if futures ends up coming back down to fill the gap, if we go to ES and we fill this gap and we run this, today, tomorrow, I just think that plus minus 20 is a little tight with the potential volatility we have. So we'll see. I mean, honestly, what I might look at is I might stack up another broken wing butterfly and just kind of take my chances, or I go out. I'm a little bit bolder, perhaps, maybe going out to end of the month or the first week of October and look and see what type of broken wing butterfly setups we can get with the expected moves. In fact, that's probably the more comfort trade for me today is go out a little bit farther, let this market embrace some of the noise. And I think that it's going to be difficult for the market to continue to go higher without some type of pause or pullback. Okay. All right. What do we have here? I'm not going to roll it, Mark. No, I don't care about rolling it. I don't want to roll it for a debit. I don't roll it for a deeper loss. So I'm just going to sit on it. 66.40 is the pin price. It's out to the end of the week on the 19th. We have another trade out to the end of the month on the 30th. We have another trade out to October 3rd. So I'm not going to roll, that trade for a debit. You're not going to roll it for a credit, right? So I'll just sit on it, man. And I'm hoping that, when the dust settles, I'm right. I mean, we took the trade mechanically at like I think it was a 13 or 15 delta. So mechanically coming into FOMC, that should have been, reasonable probability that we stay outside of that level going into FOMC. But that's what I'm saying. That 6,500 level is key. And if we're, coming back to 6,500 or below 6,500, our 66.40 is totally fine. Okay. Is double up? No, double up is, the 60% win rate with returns and the triple digits. Yes. Yep. So we have double ups that, usually my win rates are, it's a win rate of 60%, but my reward to risk, I'm going after trades that offer like 300 to 500% profit or even up to 1,000% profit. A lot of times we close those out at like 150 or 200% wins. So if I have a winner on double up, usually I'm going after like a 150 to 200% winner. Yep. Why does the shaded area at ATR look large? Well, this is my custom indicator for the shaded area is not the ATR. The shaded area is the VIX. So the ATR is here's the 50, here's a 100, there's a 150, there's a 200, my daily profit play indicator. So this box right here, this high and this low is based on the VIX rule of 16. And then you put your ATRs in here. So 50 to 100 to 150 to 200. Okay. So most of the time, day-to-day market makers are going to see prices stay somewhere between the 50%. That's usually what prices are going to do. Okay. Every now and then we will, see prices get up into the 50s, maybe run to the 100s. It's rare to see prices get into the 100s and stay there. Usually they hit 100 and they pause for the day, or they pull back for the day, or they run down to 100 and they pause or they bounce for the day. But anything beyond the 100, 150. So if we're into the 150s or the 200s, I'm usually going to short that the next day. Because usually this is a market maker roll where that risk has been rolled from a 0 day to the next day. Keep in mind that we rarely see consecutive losses with this market maker stuff. So if the market makers have rolled risk for the day and they're hedging order flows and it's pushing directional, the next day they usually go dead sideways or they pull back. or they bounce down here, they go sideways, or they pull back. Okay. So that's why trade size is the most important thing, because if I get caught, taking a nice mechanical trade, okay, I'll sell, it's a plus minus 20. I'll sell a 30 call and sell a 30 put. You go 30 points wide. If price goes 30 points higher, it threatens my call side. But if it threatens beyond like 100% ATR, chances are for the next day, it's not going to stretch another 100% ATR. Market makers are just that good, that consistent. They can't roll risk day. They usually roll it into the next day, and then we get a way to recover pretty easily. Okay. All right. So we've got a few minutes here. Like I said, comfort level for me is I'm just curious, like what today is going to bring. I think that these gamma levels are quite large, considering we're still in, VIX at 15.6. It's elevated VIX, but a plus minus 2021. That seems a little low. I mean, I can play the dead zone trade, but it's the day before FOMC. Traders that have been with me for Daily Profit Play, we know that coming into FOMC, usually Mondays and Tuesdays and even Wednesday mornings are usually very calm intraday price action because all of the drama is around FOMC. So I don't think we're going to have a ton of direction today. But just in case, I mean, that's why I'm kind of not really taking the reverse iron condor, which would be that kind of dead zone trade, because if we stay in like a 15 to 20 point range, I don't want to lose. Also, the plus minus 20 doesn't give me enough premium to sell high unless we're going way up here. If we're up into the 66, 60s, or 70s, then yes, I want to sell. I want to sell calls. But I think what threw me for a loop this morning is looking at, futures way up with that flip from September to December contracts and gapping higher, and only seeing the S&P up like 0.14%. So today just seems like a day where futures and the indexes are going to be disconnected, and all this is going to kind of figure itself out, this week with FOMC tomorrow. Okay. So we'll look at the potential top bottom on the day. VIX is at 1567. So it should be my VIX box reference from yesterday's close, but I'll do it manually here as well. So 15.67 divided by 16. So I got a 0.98% move. So take the close yesterday, go 0.98%. Puts me around 6680. Okay. So potential top around 6680 and 0.98% here is 6550. Okay, so top bottom on the day, which is quite wide. VIX has been going up. Here's my daily profit play indicator reference on yesterday's close. We're going to open up and probably be testing that 50% ATR. So I'm not just automatically going to assume I can short that. If we have that gamma level at 66.75, that is greater than 100%. So if I'm looking to short, it would be that high. I want it to be like above the 100% ATR. Then I consider doing some bear call spreads. Okay. So what I'm likely going to be looking at here is if I get filled at a 66.75 or 80, I'd be willing to take that trade. I don't think we can stretch that far necessarily intraday pre-Fed. But if I set that out there, I mean, we're going to be putting this at 50, 60 points above price, right? So that's way out there. That's way out of the money, but I think it's a safe trade. It's just, I'm not going to take the trade. It's probably going to offer nothing. It'll offer like 5 cents credit, and I want to put it in for like $1. So that's pending for the day. That's fine. I'll look at a non-directional. I'll look at a directional play with my inverse iron condor, which is this. So we have our dead zone, which hopefully is no wider than 20 points. And if I could pull in at least $6, so it'd be $1 credit on one side, $1 credit on the other side, and then have that like 15 to 20 point dead zone. Usually if I'm going 20 points wide, I can get over $6 on the trade. But we obviously have to see price go somewhere. We need to see price make a move up, make a move down, and get out of the dead zone. And the day before the Fed, I don't know. So better safe than sorry. I think that honestly, I think to me, the better trade is I'm going to go up mechanically to probably the end of either end of the week and see how high I can sell a broke wing butterfly, or I'll go out into, the Friday. This is, let's see, that's Monday. So this September 26th is going to be a Friday. And then we end the quarter and the month on a Tuesday. So maybe the 26th, if we're starting to roll over, Tuesday, the end of the quarter, or that first week of October is going to be non-farm payroll. I would like to think the market has at least had a chance to pull back and correct. But Mark, that's the thing, is I'm literally saying, like, I don't know if there's going to be a quiet day today. I mean, this does not look like a quiet day. If you look at these levels here, this doesn't look like a quiet day. This looks like everything is just pushing to the upside. If we're going to hit a 66.75 gamma today, that's not a quiet day, man. That's a 0.9% move higher. You know, that's not quiet at all. I mean, I'm looking for 22 points, by the way, 22 points. It's opening bell. So 22 points on a 66.15 day, it's like, that's quiet. That's the market maker quiet. But if we get direction that actually pushes up to these higher gammas, I mean, that's a big move. Okay. So I'm just going to kind of hold off on, instant trade, but just let me assess price. Let's let kind of price come to us. Just chillax with me for a moment. And let's see if we can get something in like the 75-80 zone. So I'll come into today. If I go 66, I mean, you see how these are offering like little to no premium? These are like tiny, tiny deltas right now. I'm just going to hold off, but I will look at a 66. Let's go 70. I'm going to go 75.80 for $1. I know that's way out of the money. That's just going to be a pending order for right now. And then I'll do a 80, 85 by 90 for $1. That's going to be a pending order. I'm just going to look at to sell those tops. That's just for today. Now, what I'm more comfortable doing, is considering I think technically this market has to pull back. I think it's going to. I think it's just a matter of what, when, why, how. But I know that the timing of it this week is going to be really difficult. We could have an incredible amount of volatility coming into a volatility expiration on Wednesday with FOMC and a triple witching expiration on Friday, which is index expirations and stock expirations and futures expirations all together on Friday. So if I'm going to go out a little bit farther, I might consider going to the 26th. Let's take a look at the upside of this option chain. I can go out to, I mean, a 55 by 60, maybe the 60 by 65, and get a defined risk trade here. Okay. This isn't too bad. Let me see if I can get over $1 on this trade. Let me try to get a buck on this trade. This is risking 900 to make $1. Maybe I can get $1.05 or 10. Let's try $1.10. I'll try $1 here. Come on. Mid price is at 5, 10, 15. Give me $1.05. Son of a biscuit. It's probably going to get me filled at a buck. If I lower this to $1, it's probably going to fill. That's a 13 delta. All right, just got filled for $1. So this is out a little bit farther. This is Friday the 26th. I'm putting this in for daily profit play. So I'm going out a little bit farther. I like the mechanics of the trade. It offers a profit trap. I'm risking 900 to make 100, but I have a $500 profit trap in case that finishes on the day. So new order for daily profit play. It's out to the 26th. So new trade, 9/26 expiration. I'm buying the 67, 60 call. The good thing is we wouldn't have any problem getting filled here. This would be a sell at 6.765 call with 2, and then buy the 6.780 call with 1. $1 credit. Okay, that trades in. I'm going to play around with the numbers here a little bit. If I go buy, sell, buy, 70, 75, 90. I'm going to try to get this one for $1 as well. I'm going to stack up a couple broken wing butterflies at these highs. This one's a pin at 65. I'm going to pin one at 75. Try to get a buck on this one. Okay, this trading for 90 cents right now. I'll just let it sit at $1. Adding one more broken wing butterfly. So 926 expiration by the 6770. I'm putting this in the Telegram chat for daily profit play. 6775 and 6790. $1 credit. Pending, not yet filled. Okay. So trade filled at $1. I mean, my gamma levels that I'm showing here on dynamic trend are pretty quiet. You know, they're not like, especially the 6675. This is not filling up to the upside. I mean, this might turn out to be like a very quiet day. I'm just not liking how wide these flows are. VIX is elevated a little bit at 15 and change. Let's see. Yeah, it's hard. It's hard to. Let me see what type of low risk I could get if I looked at a 0-day iron fly. If I went, we're trading at 21 right now. Let's see, maybe the 20 or 15. So 15 by 30. So risking 390 to make 1100, but just trying to go after partial profit if we go sideways. I feel like maybe better suited at the 20. Yeah, and I'm risking a little bit more. I'm just going to hold off for right now. All right, so let me get these in. This is put in my daily profit play. Okay, so adding in new trade filled. This is going to be trade number 474 on our tracker. Today's the 16th. Center price around 66.20. That's a 9/26 expiration. 6760. 6765. 6780. Okay, that trade's been added in. That one's filled for $1. Can both of the two broken wing butterflies succeed, or is it only possible for? No, they can both succeed. They can both. I mean, the one is filled for $1. The one is trading at around 90 cents right now. I'm trying to get these both filled for $1. And yes, they can both succeed, because if price is less than 67.65, it's a winner. If price is less than 67.75, it's a winner. So that's really what I'm taking the trade for. It's just that financing the bear call spread with a bit of a profit trap opportunity. And those deltas, I mean, out to the 26th expiration, those deltas are like 15 deltas, 13 deltas. So probability wise, we shouldn't see price going too much higher than that on a normal standard deviation. Okay. And if the market pulls back today, that's fine. For God's sakes, it should. You know, I mean, if we're looking at the future, I mean, here's a good way to kind of judge the day. If futures with a big gap open to the December contracts is going to fill this gap, you can see I have a chart alarm set right here. If we fall on futures down to 66.25, that's the futures market leading us down about 0.8%. Right? So, I mean, have I been talking about a correction? We should be ready for it. Yeah, we should. Lynn, I posted it in Telegram for a daily profit play. So I'm doing a broken wing butterfly that's out a little bit farther. I don't have a trading for today outside of my bear call spreads. So the two trades that I'm in right now are pending 66.75 by 80 and 85 by 90. Those are still pending. I don't think those are going to get filled today. So I think today is the type of day that I'm just going to assess price on the sidelines and see, okay, where's price going? Right? Is price going to be somewhere in here where it's just a volatile, 20, 30 point day, and this is the day before the Fed? Okay, fine. Maybe that is a perfect daily profit play day. I'm just not going to take that trade today, because what we haven't seen is, look, the VIX is higher. The VIX is up, like I don't know, 5% or more. I mean, the VIX is up 9% since last week. And we're sitting here with prices barely moving over 20 points a day. If the VIX continues to go higher going into FOMC, I don't want to be calling the top or bottom today. Okay. Yep. So I'm putting these in as well. So today's trades, today's DPP. Here are my thoughts. I'm just going to put, I'm assessing current day's price action and not forcing trades. Okay. One broken wing butterfly for 9/26 expiration filled. One broken wing butterfly for 9/26 expiration pending. That would be my 6775 pin price. This is the 665, 66, 65 pin price. And then I have pending bear call spreads for today. It's a 9/16 expiration. This is SPX. I'm typing this in Telegram right now. 9/16 expiration. Sell the 6675. Did I do 75 or 80? I think I did. Let me check. I did 75 by 80. Okay. So 6675, 6680 for $1. Pending. And sell 6685, 6690, $1 pending. So that's what I have running right now. We are still in a positive gamma environment until we take out 6,600. So if price today is going to stay supported here or supported here, we need to see price stay above 6,600 to kind of keep prices relatively calm, cool, and collected. Okay, there is a positive negative gamma flip zone and pivot right around 6,600. We had highs around 27. I could see us hitting 66, but it's important that if we hit 66, we stay there and we bounce there. Okay, I don't think today is a bad day to not force trades. I mean, and I say that because look, if we had, let's say liquidity levels and gamma levels here, if I had levels stacked up like this, it'd be a much easier read, right? This would kind of be like big flows, big guardrails, but it's wide open. So it's either wide open to the upside. There's nothing on the downside. So it shows me that there is no support. If this market gets below 6,600, that big pivot at 6,500 is huge. So again, what I watch in real time is, does this start to fill up to the downside? Okay. So we either come back to this 6,600 pivot zone. There's a 50% ATR. I mean, if this starts to fill up in real time, then yeah, clearly flows are heading a little bit lower. Anything less than 6,600 today starts to push this into negative gamma territory, which heightens volatility, starts to get bigger volatility swings. So I'm not forcing a trade today. It's that simple. I was going to sell way up here. It's probably unlikely going to get filled. And that's okay. If we're going to come down to maybe this 6,600 and bounce, well, there's a good chance to get a very cheap bull put spread. Okay. So levels to watch. I mean, do we drop to 60? I mean, I could put in a bull put spread. Let's find out what the premium looks like. If I went to, it's pretty far away. I mean, this is 40 points away. 65. Let me see. 65.75. I mean, I'm not going to take 20 cents on a $5 spread. But if it fills up for $1, I mean, that's a 9 delta. I don't mind having that trade out there as a pending order. Right? But if volatility goes up, I mean, look at my levels, look at my VIX, look at my rule of 16. So let me make that reference point here. Let's go to the previous day's close. Okay, so there's just a slight shift there. And based on our VIX rule of 16, I mean, 65.50 is potential bottom based on the VIX. VIX is going up, everybody. I mean, we have a heightened VIX. We're up 9% since last week. And we're being told by market makers it's only plus minus 20 points. There's a lot more volatility on a VIX that's up 10%. It just hasn't really been popping up in price yet. So again, I'm okay sitting on the sidelines. I'm okay just kind of waiting for price to come to us. Don't force a trade today. It's okay. Correction, I only see monthly dates for SPX options. What platform are you using there? Raymond, are you on schwab.com? You want to be able to show all strikes. I'll show you. Yeah, Thinkorswim. Okay. Well, if you're in Thinkorswim, I can use the web platform, show you the same thing. Here's Thinkorswim web. Let's go here. All right. SPX, find the options chain. So if you're on Thinkorswim for SPX, you should have all your strikes here. So what aren't you seeing? Here's the 0 day at September 16th. There's my option chain. So what aren't we seeing? If I go to Schwab and I go to the options chains, I'm on Schwab Web 2. So $SPX. Check your options chain. You might just want to check your strikes. Show more strikes. Go like 48 strikes. Okay, and you can do all expirations. Make sense? So more strikes and all expirations. It's probably because they limited you to 60 days. So change this to all. And now you see all of them. Yep. There you go. Okay. Today's class, by the way, today for my masterclass, Daily Profit Play Masterclass today at 1 p.m. Eastern Time, we are going to dive into a couple different option chains. So using Thinkorswim Web, using Thinkorswim Desktop, using the Schwab.com web platform. These are things I just want traders to be comfortable navigating the broker platform when we're finding these trades. Okay, chart alarm set on futures, see if we fill that gap. SPY has quickly come back to fill the gap. SPX down a little bit. I mean, interesting how this changed, right? We've had 15 minutes of trading and this pretty much disappeared. It's like the call wall is now 66.30. And I mean, for everyone that's been asking me about, Chris, you're 66.40, you're 60. Yeah, I know my 66.40. I know that it's in the way right now. I know it's within the expected move, but I'm also out to the end of the week thinking that will the Fed kind of put in a top? Will cause a little bit of pain? Maybe we get lucky. If the market, sells off coming to the Fed, great. If the market breaks below 66, we get into negative gamma. If we come down to 6,500, look, I'm telling you, we're not even close. We're not even close to correction levels. The correction levels that I see in this market are way down here. Okay. My correction level when I'm considering maybe buying the dip in my waterfall income or double ups or even daily profit play, my correction levels of buying the dip are down to 6,400 or lower, down to 6,200 or lower, right? Previous all-time highs. That's where I'm buying the dip. So all this little stuff up here is like, I mean, for defined risk, I'm trying to call a bit of a top. Trade for day, Peter. I don't have one running right now. I've got pending orders. That's it. I'm just letting price kind of hang out, come to me. If I wanted to set a trade for the day, I mean, we can. Look, we're kind of back to center at the gap. I think we're going to get a bit more directional here, but let's find out. Let's find out. I'll give you the mechanics. I don't know if I like the trade for today. I'll just be real honest. I don't want to force a trade. We're at a plus minus 15. 15. So if I were to sell, this is a 16 delta call and let's go 18 delta put. I mean, I can get $1 and change. Let me see if I can move this up to a slightly smaller delta. I want to get at least $1 on this trade. So that's 85. Let's see here. I mean, the 50% ATR is at 35. So I'm already like flirting with a price that I'm not super stoked about. Let me see. I might just hold out on this one, see if I can get $1. This is a 12 delta. Let this one sit for, I'm not going to fill it at 85, but if it gets filled for over $1, I'll try this. I'll put in a pending order today. 15 delta at 90.85 and see if this one fills for $1. Downside 6,600, 50% 66.95. I'm going 90 here. I'm going to go out a little bit lower to a 12 delta and an 8 delta. See if this will fill for $1. All right, I'm going to put in a pending standard daily profit play with a little bit of buffer above and below the expected move. It's trading at 55 to 60 cents credit, so my dollars trade is not going to get filled right now. I'm going to put it in for a pending order. Okay, let's see if this gets filled. It might not get filled. That's okay. I'll put it in as a pending order. All right, I'm putting this in Telegram right now. So that is the 9/16 expiration. 66.45 by 66.50. 65.85. 65.80 for $1 credit. Okay, pending order. So if that fills, it goes in the tracker. Right now it's trading for about 70 cents. Price has fallen a little bit. I mean, price seems to be rolling over a little bit. Price is rolling over a little bit. We filled the gap. That positive negative gamma zone is around 6,600. 50% ATR is at 65.95. Anything lower than that, these levels are filling up just a little bit. That 95 is filling up a little bit. Just watching some real-time flows. Put and call ratios, put sentiments a little bit greater right now. Starting to fill up. There is also a gap fill. This was Friday. This is Friday's close around 83. This gap fill could also be happening with price action today. I honestly, I think that having a higher VIX, I don't like this plus minus 16 points today. I think this market is able to go a little bit more. I don't think we should have like this crazy run prior to FOMC, but and good. Here's the good thing about just sitting here. We don't have to do anything. We're not risking any money, and we don't have to second guess our decision making. If price doesn't give us a trade that I like, I'm not going to take a trade. So what would I like to see today? Well, knowing that we've got some call resistance up here, I want to sell high. If we're going to start fading lower and the VIX is going to go up, I mean, I've got to be mindful that maybe we have some bouncing in here. But if we have one day where it just exceeds the 50, goes to the 100, it's like everything's at risk. So I don't need to force a trade. And if price does absolutely nothing, then great. Market makers are spot on, and it was a Tuesday that didn't do anything prior to FOMC. It's fine too. I just want to go a little bit wider because that plus or minus 15 is so tight. So tight. So I'm going to go a little bit wider, see if I can kind of catch a larger range. My levels, 45 to 85. I'm going 60 wide. So it'd be a plus minus 30 on my side versus what the market makers are showing right now, like a plus minus 16. So I'm trying to stay out of the money to increase my probability. I just haven't been filled on the trade yet. It's a plus 70 cents credit. I'm asking for $1. All right. So trade is pending. It's in Telegram for members, but it's not filled. Okay, let's see here. China agrees to TikTok deal with US that includes algorithm licensing. There's a toss up right now with companies with who will acquire TikTok, and it looks like the front runner is Oracle. Interesting. Okay, so while we're kind of sitting here waiting for some of these trades to pop up, I'd like to pull I'm going to go a day early for my pinch point, and let's pull up my watch list Wednesday. We're doing it today. Let's see what stocks we have setting up for my go filter. Intel, VKTX, Johnson & Johnson, OKTA. That's an interesting one. That's an online education portal. Yeah, let's have a look at some of these. So we'll see if price can come to us. What I'm looking for is if I can get my daily profit play to get filled, it would be a strike price of the 85. And that gives price a little bit more breathing room to come down and then come back up. That would be filled at $1. I'd be risking 4 to make probably 40, 50 bucks on the trade. I'm going to try to hold it a little bit longer if I can. Okay, so not filled yet. Put side, we're trading around 70 cents still. The broken wing is not filled. This one did fill. These are bear call spreads. Unlikely. This I'm just going to cancel. This is probably not going to fill today. 85 and 90, 75, 80. Those are probably not going anywhere today. I'll cancel that one. I'll cancel that one. So now I have the daily profit play pending and the broken wing butterfly that's up to the like the 12 delta on a September 26th that's pending. Okay, I want to spend some time on my pinch point. Let's find some stocks here. So what I'd like to do before we go into my go filter is let's look at all stocks. Let's see if we have any filters on the indexes. So my SPY. Looks like I got neutral and no pinch on SPY. Okay, so that's not a trade right now. If I go to the QQQ, right now it's showing neutral, no pinch. Okay, how about the Dow? Also, these recently hit all-time highs, so we might not have anything here. Dow has a breakup and a get ready, so we're in a bit of a pinch in the Dow. Okay, let's have a look. Let's go DIA. I want to price this one out. I'm going to go DIA. Let's look out maybe in this like 60-day window. I think like 60 to 90. Depends on how it prices. We got plus or minus 23 on 5 wide. Come on, Dow, you're better than that. Give us some precision, would you? This is better. Now we have dollar strikes. Okay. So I've got a plus minus 20 and a half, 20.44 with a dollar wide strikes. So let's see if we can go maybe up 10 bucks. So we'll go up to like a 470, 475. And let's see, 460 to 450 to 45. So I pay $3 to make $5. That's, for an index play, that's understandable. I don't really want to go too much higher than that. So that's $4 wide. So 235 to make 4. I'm going to try to keep this pretty fair here. Let's see. I almost want to give myself wider room to the downside. That's 4. 5. So 251 to make 5 on the downside or make 4 on the upside. What's 50% of this? So if I go 253, make $1.26, I'll go after $1 on this trade. This is a pretty good trade, either 475 or down to 443. All right, I think I'm going to take this trade for pinch point. This is DIA no more than 255. So I'm going to try 250 debit. $251. Okay, pinch point, new trade. This is going out officially, pinch point telegram. This is a DIA, trade number 50. DIA, today is the 16th. We're going 11, 21 expiration. Find the 471, 475, 448, 443, 2.52 debit. Okay, so that trade is filled. This is for pinch point. So make this officially a pinch point trade. Pinch. And I'm going to go after 252 debit. I'm going to take a take profit at 3.52. Actually, I'll take a 40% winner instead. So 0.40 is $1. That's right. So I'm going after 40%. I like it. Okay, new trade for pinch point. Plugging this in Telegram right now for pinch point scanner. $3.52 credit. This is searching. This is max profit of $5 on put side and $4 on call side. All right. And price is sliding a little bit lower right now in SPX. Let's keep going with pinch point. Anything on IWM? IWM showing a breakup with no pinch, so it's not coiled. That's not what I want. I want coiled. So indexes wise, other than the Dow, S&P or SPY, Qs, IWM, no setup in pinch. Okay. So let's go to the go filter now. Let's take a look at some of these. Okay, VIX is up, by the way. I am going to remove the SPX. Fudge. Let's just revisit this whole thing for SPX today. Intel's got a good looking pinch. I like that trade. We'll check the expected move, see if it prices out the right way. Is this going to hold? Let's check a 66.30 today. Nope. If I can get $1, I'm okay taking some spreads at $1 plus. If I get $1 out of a 5 wide, I'll take a trade, but I've got to go way too tight to the expected moves. Highs in the day around 27. So if I'm already doing a 25, we get up to the highs. That's a pointless trade. So I'm still going to keep, 85 by 80 and 45 by 50. It's just not 45 by 50, 85 by 80. Yeah, just not setting up yet. It's okay. I mean, I don't know. I'm just not forcing a trade. It's that simple. I'm not going to sit here and justify why am I not in a trade today when I've got a broke wing butterfly, trades to watch, trades to manage, and it's the day before FOMC. I think the fireworks are coming. So let's let price be price. Okay, let's go back to this Intel. Intel at 24.98. We do have a really nice pinch on Intel. You can see it here. Okay, so price is coiling really nicely. That's what we want to see. I would imagine to the upside is probably the more likely direction. Question is, are we going to get this two things, right? There's a big gap fill up here on Intel, which I could see price obviously coiling and then making a run higher. Government took a stake. I think it's like 10% stake in Intel, but could it come right back down to the lows? Well, let's see what the plus or minus is. We're at $25, going up to 28, 29. This is the tricky part. Unless I have like 50-cent options, this one might not be a great trade as far as how the options price is set up. So I'll go Intel. We have earnings on the 30th, maybe going out to that November 21st. That's 66 days or end of the month. I've got dollar wide expecting like a $4 move. So if I go 25, 25, 20, 30, I pay 320 to make 5. I don't love that trade. I go a dollar out, I pay 228 to make 4. That's okay. Maybe go a strike higher. I pay 255 to make 5. So let me get the break evens here. If we go $4, that puts me around 29. That puts us up to $3. That covers the cost, but we're maybe making like 50 cents on this trade. What's this gap fill? 29, almost $30. 19, that's $6. Like, okay. 4 and 4. So I pay 230 to make 4, or I pay a little bit more, like 255 to make 5. I'm going to take this trade here. This is out to the end of the year. Can Intel get a bid through earnings? Let's go 254. 255. Come on. I'm not paying more than 260 for this trade. Come on, Intel. You turd. All right, got filled at 259. New trade on pinch point. Okay, new pinch point trade. Trade 51, tickers Intel. We're going 12/19 expiration. This is a swing trade, buying the 26 call, selling the 31. Buying the 24 put, selling the 19, going 5 wide. So 2.59 debit. And I'll set a take profit in this one. So Intel 2, 3, 4. Pinch point. So if I make $1 out of that trade, what's $1 out of 259? It's a 38 percenter. I'll go 40%, 40%. So $1.03. So if I put the debit at or the credit at 362, I'm just going to I'll take the 38% winner. I'll just set for $1. So here closing at 3.60 credit. Good till canceled. Okay. Trade is in, adding this to pinch point Telegram. Okay. So copy and paste. There we go. That's in for 259 debit. Setting take profit at 3.59 credit, or 3.60 credit. Okay. Nice setup there on Intel VKTX. Next on the list. This is Viking Therapeutics. This one is, we had a big gap lower, pinched. I don't know if I'm going to like this one on the options chain, but we'll find out. VKTX. Very small move. Two wide strikes for a $7 expected move. Don't love it. Do we gap fill? That'd be a $16 gap fill. Do we fall lower at 20? That's only $3 or $4. Been a bit of a mover. I'm just going to check and see how this, last time this was pinched. Stayed that way May, June, July. I'm gonna come back to that one. VKTX. I'm writing this one down. So VKTX. Okay. Circle back to that one. Johnson & Johnson. I don't mind this one. This one's got a pretty nice pinch to it. Okay. So option strikes are going to make all the difference. So nice pinch. We're going higher. We're going lower. Let's find out. Let's see what the option strikes are. J&J. Earnings in October. I'm liking this November, December window. 5 wide for a $10 move. That makes it tough. November, 5 wide for a $9 move. That makes it tough. Yeah, there's just it's tough. This is what I have to just check. Sometimes the option chains, the option strikes. If we have a $10 expected market maker move and the strikes are $5 wide, it doesn't give me a lot of precision. So I probably will not take this trade unless it's really cheap. So 290 to make 5, that's a little bit pricier than I want, and I don't think we're going to hit this expected move. Now I pay 450 to make 10, which is fine, but if we go 950 from current price, that's a 185 that barely covers this trade. If we go $9 from here, that puts me down to like 157. That barely, no, 167. That barely covers this trade. So I don't like that one. And it's not that I don't like the trade. It's that the option strikes don't give me good enough precision. Okay. SPX might be getting closer to filled, by the way. We're getting close. If I'm checking the SPX on the day for our daily profit play, we're still trading Iron Condor around 70 cents. It's up to like 70 cents. I'm trying to get a buck. So I need price to see maybe it fills on the bottom side. That bottom strike is 85, which is going to put that in a much different delta position. Okay, we'll see. Okay, ABT, I think this is also in the pharma place. This is Abbott Labs. A lot of good coiling there. Okay, ABT, nice and coiled. This one has a history of like staying coiled for a while, though. It does have like a huge move potential. I think we have to go out about 90 days for this one. Again, all about the option strikes. So good coiling, good pinching going on right here. Can we break to go to all-time highs? Is it going to be just a resistance level and low? Let's check the expected move. This one I probably want to take over into 2026, to be honest. Some of these coils that I've seen, November, and then it ripped in January. May, and then it ripped in July. So we probably have to go out 90 days in this one or so. So ABT earnings on the 15th. If I go into January, five wide and 11. Ugh, come on, bro. $11 expected move for a five wide strike just doesn't give me precision. Me no likey. 140, 145, 125, 260 to make five. 145 be all-time highs. Can we get to all-time highs? That one's doable. Pay 260 to make five. $11 from here puts me at 143. That's barely enough to cover the cost of my trade. 131, or I'm sorry, 121. That's closer. So the put side could get paid. Call side, not so much based on the option strikes. I'm going to pass. Frustrating. OKTA. I haven't looked at this one in a minute. I had a buddy that made a lot of money on OKTA back in the day. But I say that he made a lot of money up here. He just bought the dip, 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 and then it all fell apart. He just stopped paying attention to it. He thought it was a sure thing, and he started doubling down and got stuck in a terrible position. So nothing is a sure thing. Just take good trades. We are coil on OKTA. Very nice pinch in this one, actually. Like, really nice. Now let's see the options chain. OKTA, maybe a plus minus 16 out to January. 250 wide. I think we can work with that. So if we're expecting 16, maybe I go up 10. We're at $90 right now. Let's go 100. 100 by 105 and 80 by 75. Pay 270 to make five. I wish it was better. I want this to be over 100% or 100% reward to risk. It's not. I'm risking 278, 280 to make 220. So not setting up the way that I want. So I'll pass. That's a bummer. FLR. This one is Pulver Corporation. Going nowhere after a gap lower. Very sideways, kind of dead. Right in the middle. So recent highs, recent lows, pinched in the middle. Price has to go somewhere. So are we going down to 29? That's an $11 move. We're going back to 58. That's a $17 move. Okay. Let's see. Plus or minus 8. Okay. And, again, just going to give a shout out to market makers. This is what they're pretty good at. And even today, with the gap higher in the futures throwing me off, the market still, it's not centered. I mean, we opened up here and we're now coming back to center. So this could be a, winning day with just a standard daily profit play. I just didn't like how tight it was. Plus or minus 20, plus minus 25. I mean, I would be selling so close on the call side, put side. That's why I didn't get the fill. So we're probably not going to get the trade that I want today. And that's okay. I'm okay with that. So I'll wait. I'll see what happens. FLR. Let's go out to 250 wide and a 1075. Let's go 6. And maybe this 35. 265 to make 5. Previous highs 57. That gets us profit 29. I don't mind this trade. It's a little bit more expensive than I want. I'd like this to be like 260 or less. Let's try 260 debit. Let's try 255 debit, actually. 255 debit on FLR. Let's give it a whirl. 255, no. 256. I'll penny this thing up. Hopefully no more than 260 on this trade, even though that's the bid or the mid price. So all these trades that I'm going through right now is using my pinch point scanner, and I'm putting these trades in my pinch point scanner alert service. So I've got a fill right now running on Intel, ticker INTC, and the Dow, DIA. Those are two trades that have been taken so far. Okay, 258 not filling. Hopefully 260 gets filled. I don't really want to go too much higher than 260 on this trade. All right, I'll give it a go at 261 or 262, and that's about it. 261, no. Final offer 262, survey says. Nope. One more, 263. I'm willing to risk that extra penny. Boomer. All right. That sucks. So 5 wide, 265. What's 40% of that? So if I did a 265, $1.06. All right, go. All right, I was gonna say I'm going up to 265. I got filled to 264. Another trade coming into pinch point right now. This one's out a little bit longer. Ticker's FLR. $264 debit. Okay, so that's FLR. Pinch. And I'm going to set the take profit at $1. So 3.64. So if I make $1, that's a 37%. I like that 30, 40, 50% take profit. So that sets up pretty well. Throwing this in pinch point scanner. New trade. So filled for 2.64 debit. Setting take profit at 3.64 credit. I'm new to trading the pinch service. Since the trades extended weeks until expiration, is it still possible to get into the trade? Yeah, for sure. Unless, look, if you look at the chart on FLR, here's how the trade is not valid. Okay, the trade is not valid if you're looking at price here and it's nice and pinched, and you look at this a week later and price is up here or down here. Okay, anytime I take a pinch point trade, what you want to see is a nice batch of consolidation, a nice batch of price coiling, and the trade is still valid. But when I'm setting strikes, out here or out here, I don't want to be chasing, this is where I want to take the trade based on this centered price, based on this coiled price. So you have time in the trade. But if you look at this, let's say by Friday, and for some reason this thing moves, up $5, then it's not the trade I want you to take. Okay. All right. That is FLR posted in Telegram for my pinch point. Also updated on the tracker. Let's keep going. CI. $293. This is Cigna Group. I have a trade on this one already. This one's going to be interesting on the strikes. I don't know what this one is. So Cigna, I've got some trades in Humana and Cigna, UNH. In fact, let me check some UNH. This is United Health Group, the most hated stock in the world. But I've actually made some pretty good money on it. So right now, max profit of $615. I'm up $300. We're trading at 340 with a 270 by 260 ratio spread. Pretty sure this is going to be good. So this is 6, 12, 18, 24, $3,000. This is worth $3,000. That's not bad. All price has to do is stay above 260. It stays above 260, I get full credit. 260 to 270 is my profit trap. So I potentially can make $1,600 on this trade, which would be pretty epic. Option strike wise, let's go out to January and look at the 260. Right now, the delta on that is a 10. So there's about a 90% chance of profit on my trade on UNH that it stays above 260. But because this is a ratio spread, I did this for my project options edge service. And because that's a ratio spread with a 10 delta, there is a $10 wide profit trap. So I'm going to let this one marinate. I think this is a great trade. If I'm going to close it with the 615 credit, if I'm up over $500, I might consider taking profit. If it's way out of the money. So if we're up here, let's say UNH is trading at like $400, or for $400, the 260 is so far out of the money, I'll just take the profit and move on. Or I can let it expire, obviously. But yeah, I think so far it's looking pretty good. With that profit trap, I like it. All right, so Cigna, that's just reminded me of UNH because of Cigna. This popped up on Pinch Point Scanner. It's in the Go filter, which is good. So let's go CI for Cigna. We're trading at 293. So it's all about the option strikes because this one is a pretty expensive stock at 293. So let's look at the chain here. We have earnings on the 30th. If I go out, plus minus $31 to $38 out to January. 10 wide. This is a little bit tough to be precise on. I probably won't take this trade. Yeah, I'm probably not going to take this trade. I'll hold off. I have exposure on CI already. This is a project options edge trade. I put in. Did I not take the trade? Thought I did. Hang on. So we have some pretty strong support, 257, 240. That's 2023. Let's see. Let me check this one fundamentally. CI, Cigna, good snowflake analysis. Yeah, I mean, I don't mind looking at this one. Kind of like UNH. I mean, fair value at over $1,000. There's a lot of upside here. I think that concern has been everything with like RFK Jr. and all these potential changes to pharma and healthcare. And Cigna's. I mean, is this insurance or is this healthcare? Insurance related. I mean, I hate insurance so much. It's a good stock to trade because it's so freaking profitable. It's just a huge ripoff to everyone that pays insurance. But 240, maybe 200. I mean, if I want to get a really good income trade here, I'm going to go out longer, go out to like 200, give myself plenty of wiggle room here. Let's see what happens. This is probably going to be a project options edge trade versus a pinch point. I don't think the pinch point is going to set up right the way I want. So let's go out to, I can look at the kind of the bullish window, maybe June of 2026. We've got low, 200 is not bad. That would be from all-time highs. Price would have to be down about 50%. Not saying that it can't get there, but probably won't get there. 200 by 195. It's not a bad little income trade. Let me see something here. If I went out a year, if I buy the call, sell the put, and maybe buy. So I buy, I sell. That's an out of the money. Yeah, it's not going to work very well. It's cheaper than owning the shares. It's cost me, $9,800 to do a synthetic with a hedge versus just buying the shares outright. But it's a lot cheaper doing a ratio spread. So 200 by 195. That's not bad. That's even better. So I get a 10 wide profit trap, making still $200 on the trade versus 270. Don't mind this trade at all, actually. Let me see if I can get this for $2. So I'm going to put this in for my margin accounts. This will be for Project Options Edge. $2 not filling. Let's try $1.95. I might have to just go strike 195. I wanted that bigger profit trap. Let me try this instead. Let me cancel this trade. Maybe I do the 210 by 200. Now I get 270 with a profit trap. So if I did own any shares, it would be below 200 bucks, which is way down here. And I have a profit trap. So let's go 200 bucks. 200 is my assignment price minus 10 minus 2.70. So I'd own the shares at 187. If from here down to 187, we'd have to drop 35% from current highs. We'd have to drop 187 would be around a 50% drop from all-time highs. Probability of profit's pretty high. 94% chance of profit. See if I get 275 in this trade. Again, this is going to be for margin accounts. Let's try a 270. I'll take up the 250 on this trade. 265. If I get 250 or better, I'm still taking it. 265, not filling. 260. Come on, Cigna. Hook a brother up. 255. All right, 250 final offer. No. All right, mid at 245. I'll go mid at two. I'm going to go 249. Try to work my way down to that mid price. Not filling. 248. 247. Now the mid price is 220. Yowza. 245. Okay, final offer is going to be 240. And if it doesn't fill, I'm not taking the trade. 240 final offer. Nope. All right. I think that's why I didn't take the trade the first time. All right. So I do like the trade, but not filling. I'm not going to chase this thing down to like a nothing credit. So I'll pass on Cigna. All right. So it's too expensive with the strikes and a little bit, I guess, not precise with the strikes. So I'm passing on pinch point. Try to set up for project options edge. I really do like that trade. It's just not filling, unfortunately. Nah, I wouldn't say that, Bodine. I'm saying final offer because I know, look, if it's 5 cents lower, I'll sacrifice the $5 to get a fill. So I know what I'm willing to get filled on. All right, HSIC. This is Henry Sheen. Never heard of it. 68.58, extremely choppy. This one might be a no-go. I just see a lot of coiling, a lot of volatility, a lot of chop. Yeah, this one's kind of notorious for just pinching and barely moving. I'd say this is a no-go. It's very coiled, but it has also been very coiled for a very long time. I just don't think we get the type of runs that we want. This is going to be like plus or minus $5, and I want more volatility than that, so I'm going to pass on that. Would you consider selling a put spread ratio for CRM at this point? I already have some. Salesforce. I haven't done. I was thinking of a CMG for Chipotle. What level you like in there, Jojo? You liking this? Are you liking this like 230 zone? I mean, let me take a look at this one. Salesforce. I don't know, man. I'm a little skeptical of the software side. I don't know if AI is coming for Salesforce. It looks decent. Trading below estimated value, but not by a ton. 34 times price to earnings. I like to see that come down lower. Yeah, I'm not a huge fan of this one. I think if I could go all the way back down here towards like, I mean, I know this is crazy extreme, but if I was down here towards like 213 or 200, now we're talking, sure, take a stab at it. But if we came down to like 140, 120, that's a different story on this. I'm going to stay out of the software tech side. I know this is like customer service stuff, but well, I take that back. If they integrate AI, then I feel like they would fire people, but they might be way more efficient as far as profit margins. So I guess it depends on how well they integrate. Yeah. So at 213 or 200, you could talk me around a 200 level. Let me see what this one looks like from a 200 perspective. So CRM around 200 bucks, maybe out to January, 200 bucks. I mean, I could go a reasonable ratio spread here. $300, probability profit 87%. The question is, do I want to own CRM? If I went down to like 150, that's way out there. Let's go maybe into May. 155 by 150. This one's not bad. 155 by 150 ratio spread. It gives me a $5 profit trap if it's down that way. Otherwise, it's income at 145. Not bad for a margin account. Not bad for a margin account. Um, I mean, that's a low delta. IV is at 20. I'm just wondering, why is this stock down, 30+%? Is this a head and shoulders pattern? This is kind of what's making me stand off right now. This neckline, if this is a head and shoulders trade, does it stay at this neckline? Does it coil here? And then we have another run to all-time highs, which it's a stock, so I could see that being the case. Or is this head and shoulders where we break the neckline and we're talking Salesforce is down to, 125? I know that's a big if. There's some support here, yes. There's support here, yes. But if this breaks lower, I don't know. I'd almost rather wait and see. I mean, if I were to look left on the chart, go to weekly time frame here. I mean, I suppose it's a larger channel. There's a good kind of halfway point in this channel. I'm just trying to get, out of the way as much as possible. I don't know how excited I'd be if I got assigned on CRM. So it's probably going to make me say no to the stock. But if you have a low risk, I mean, like individual trade, you just have a low risk, right? I'll say this, I don't want to keep the assignment. So if I did a credit spread here and price goes up, I don't want to take the assignment. It's that simple. So I would take whatever I can get from a credit spread. We're trading at 240. Let's say the low end is 228, but if we go up directionally for the next, let's say by the end of the year, is CRM going up by the end of the year? Okay, let's check and see. FinViz, do they have any news, any buys, any analyst updates on CRM? Okay, is it a buy, hold? Is it a sell? So outperform, underperform, buy and hold, overweight. Teams up with CrowdStrike to fortify AI agents against growing cyber threats. I mean, that's a good kind of future talk. AI will drive 263 billion in global holiday spending. Wow, that's today. Let's see here. Online marketplace. Adobe, that's another one that I've seen a lot more AI pushes on. Data cloud adoption jumps 140% will aid sales growth. That's yesterday. All right. I mean, at least it's showing up in the AI space. So maybe to eliminate the assignment risk, let me see what this one looks like from a. Let's try something like this. Maybe we get a cheap debit spread. Maybe I can do like a 230 by 235 and get the price that I want. Let's go out to maybe end of year. Ooh, 230 by they're 10 wide. Yuck. 227. So if I did a 220 by 30. So 220 by 230. I'll try this. I'm going to try a 220 by 230 for a $3 debit. That gives price room to fall. It might not fill, but I'm only risking $3 to make 10. I'll try it. So this is a pending order. See what happens. So I'm risking 300 to make 10, which gives me a 700 profit as long as price is above 230, but I've got to get filled on the trade. It hasn't happened yet. Price has to fall first. So I'm going to put this as a pending order for CRM. Okay. This one's just a bonus trade. This one's not filled, so I don't have a service to attach it to, but I'll go CRM, 116 expiration, buying the 220 call, selling the 230 call, $3 debit, pending not filled. That gives price a little bit of room to fall. And then we can get filled to hopefully a good bargain price with a low risk, high reward. Okay, FE. Let's do a couple more on pinch point this morning. FE is First Energy Corp. Okay. I can get myself around some First Energy. Depends on the strikes. Pretty good range in this one. Probably not a high flyer, but we have all-time highs at 49. We have all-time highs at, or I shouldn't say all-time highs at 49. We have resistance highs at 49 and all-time highs looks like around 53. Decent amounts of consolidation. They do get some directional pushes, so that's encouraging. We got a nice little pinch. This is a nice mega pinch. So nice coil, nice pinch. Price action. Let me check the fundamentals here. Let's see if we have some upside on FE. Price to earnings. This is utility company, probably low volatility. I'm almost positive it's low volatility, but ooh, that changes things up. So price at 43 and change, fair value 28. Well, I don't like that. Check the options chain. All right. January to March, dollar strikes, $4 underlying. That's not really going to make as much. It is nicely pinched. I just don't know if we're getting it more than what price is given us. So a 44, 43. Can we get a $5 move? 43.38. I paid 288 to make 5. That's not a good trade. So backwards reward to risk. Paying 316 to make 6. That's beyond the expected move. It's probably not good enough. Plus or minus 4. That's a tough one. All right. Not going to cut the mustard on that one. GDDY. Is this GoDaddy? No, that was sold. GoDaddy. Yeah, it's still public. I thought Bill Parsons sold this thing. Are they losing revenue? I mean, this should be another thing that you'd think would benefit from AI. Hey, put in some AI agents, build a website for people. Or maybe it's just domains. I don't know. All right, we'll try one more. Pinch wise, it is pinched. Good volatility. Let's see. So nice pinch, 145. Check the options chain, the strikes, GDDY. Check the fundamentals. High level debt, insider selling, profit margins lower, but does have some estimated value. See price to earnings. Price to earnings 24, almost 25 times. All right. Coming back into this yearly moving average, certainly in a bit of a sell zone, which I don't love. It's hard to kind of call the bottom here, but if we go out far enough, we get some direction. That's all I'm looking for. Give us some direction. Plus or minus out to January, about $20. Let's see what the strikes are at. 5 wide on 20. I had a feeling. If I went 55 by 60 and 35 by 30, 320 to make 5 doesn't offer enough. That's too much risk for what I want on pinch point. I want to get this at least, close to 100%, if not better. So that's not gonna work right now. If I go a little bit farther, January, February, March, $20, If I went to maybe the 15 wide and the 15 wide, 235 to make 5. This is more like it. We move 20 bucks. That puts us up to 165. That gets us paid on the call side. We move down to 125. That gets us paid on the put side. Paying 230 to make 5 does that fits the bill. I'm going to go after like a 30 to 40% profit on this one. Hopefully we get filled. Let's try a 230 debit. $230 not filling. I'll go mid price at 235. Willing to spend up to 250 on this trade because it's 1-to-1, but hopefully we can spend less. 236, 237. All right, hopefully it's not more than 250. Come on, I'm going above the mid price. $245. Still going. 250 is my final offer here. That's annoying that I'm going 12 cents above the mid price and still not filled yet. All right, a couple more. Try. 249. Final at 250. Okay, drum roll, 250. Let's go. Nope, didn't take. 251, that's it. Wasn't meant to be. Okay, 251 out of a 235 mid price, not getting filled at 251. That's a bummer. Cancel. Better luck next year. All right, we'll do one more together. CTRE, let me just take a quick glance at these. CTRE, $34 stock, minimum movement. I'll pass on that one. SARO, this is Standard Arrow. $27 minimum volatility on that one. IDXX, Labs, 640 bucks in that one with a big fat pincharoo. Look at this bad boy. All-time highs at 700. This is all about the strikes, though. This one might have like 20 wide strikes. Expirations are way out there, so maybe January. 10 wide strikes on a $90 move, though. Maybe. It means we're probably going to have to spend $3, $4 on the trade, but volatility is pretty solid. Are we going to... That's $67 higher. Filling this gap. Where was that gap at? Filling this gap is, wow, that's $110 away. So either we go 70 to the upside or we drop 100 some to fill the gaps. Let's see. So 90 bucks. Let's go 50. See what we get. So if I went to 90, so 335 to make 10. But now if I double that and I go $50 this way, that would be 640 to 590. It's going to be like a $6 or $7 trade. Yeah, it's too expensive. Mark, it's probably going to have to come down closer to the put side, to be honest. Right now, price is just, I mean, if you did like, did anybody do a standard daily profit play, by the way? Like my Daves, my Marks, my Larrys, like my usual, just, you don't even listen to me. No, it's totally fine. You stick to the process, right? You go your 15, 20 deltas like we talk about in the master class, and you do your thing. And I'm just looking at price action day. It is down. Just depends on how tight price was. I just thought the plus minus at 15, only going 20, 25 wide on a day before Fed. It's like, I know price is pretty quiet right now, but we have dropped about 15 to 16 points. Yeah, Greg says up 220. Okay. So, I mean, price has been calm enough, right? Price has been calm enough, but having a little bit of a fall and now price is sideways, you don't want to see price go too much lower. right? To threaten. So, I mean, if you're up some profit, good, take it. It seems to be just kind of chilling here for the day. So more than likely, I'm going to pass on IDXX. And let's go back to SPX and see what we have for the day. So I did not have a 0-day trade today for daily profit play. I have my pending I have a pending broken wing butterfly for the 26th. I have today's trade that is sitting for $1 still that hasn't been filled with the 85 by 80 put spread. Okay, so what I'm looking at on my liquidity levels here is we have this 65.95 level, which is my 50% ATR. I said that importance of the 6600 positive negative gamma zone. So if we kind of slowly slide down to that 6600, do we bounce off of that and finish the day sideways? So our best chance of getting filled is going to be maybe a push down to 6600 and then a push back up into kind of a neutral zone. If that doesn't fill today, it doesn't fill today. Okay. All right. Let's see here. Larry says, did a 66.45 by 90, 10 wide, $1.25, only up 10 cents right now. Did the 30 and 40 bear call spread out at $1.20 profit. That's awesome there, Larry. Dave says close to 10 wide for $400. Very nice. Good, Dave. Yep. So just sticking to the script. So I'm going to make an executive decision today. This iron condor is sitting for 50 cents. I'm not going to take 50 cents. Also, if it gets filled for $1, it's probably because price is testing the put side and or call side. I'd rather just take a fresh trade. So I'm going to cancel this. Those bear call spreads I canceled because that was an 75 by 80 on the 66.75. That's way up there. That's not going to get filled today. So what I'm going to stick with is a trade I took this morning, which is a 926 expiration. So out to, let's see here. This is going into the 19th. It's going to be not this Friday, but next Friday. Okay. So there's $1 that got filled on that trade. That's a 67.65, which is 170 points higher. Okay. Or I guess 160 points higher. That's great. 160 points higher. Hopefully we don't go higher than that, especially going out to the end of the month. If this market gives a funding about technicals and corrections at 90 plus bars from a 50-day moving average, it should correct a little bit. Second half of September historically is usually where the bears kind of sneak in for some pullbacks. This one is pending. So this was a 67.70 by 75 by 90, but broken wing butterfly, same expiration on the 26th. It's trading right now for about 70 cents credit. I'm asking for $1. Okay, there's risk in those trades. My max risk is if price is greater than all my strikes, there's a $900 risk, $900 risk. But the probability of profit on that one at $1 is pretty high, and I also have that potential profit trap as well. Yep, so working on those. I'm working on those. Can you explain on the GoDaddy trade you mentioned margin account? I have 99K net credit exceed. Yeah, but I didn't take the trade, David. I didn't take the trade on GoDaddy. Net credit exceeds regulatory margin requirement. So what's the trade? You probably typed it in backwards. What was our trade? I didn't put anything in. I was looking for, let's see here. If we went out to like January, 5 wide and a 20. I mean, if I went to like the 55 by 60 and the 35 by 30, spend 3 to make 5. I mean, something like this, maybe 550 to make 10. It's workable. That'd be one. I mean, this one is actually okay. So if we move $20, then that puts me up to 165. I can get paid on this trade, right? I can get paid a couple bucks on this trade. If we go down to 25, so if we hit a plus minus 20 from current price, I mean, it works. Let me check this one again. I just didn't get filled on the trade. So I did like the GoDaddy trade. I liked it, but are we going to go? I mean, this low's 132. We're going to test that lower. We're going to come back into 160 something. It's just, I would say from like where this thing started. Let me change the color here. From where this started to ended, it's pinched. right? So either we go down again to make a fresh low, we need this to get down to 125, or if this is a V bottom reversal pattern, we go back up, we're trying to fill, this area, plus or minus 20. So plus or minus 20 is what we want. So I want 165 or I want 125. Okay. 235 credit. I'm not sure why you're even, what trade are you getting for 235 credit? That wasn't the trade I looked at all. So give me the legs of the trade you're in, David. You're looking at. I don't have that trade. This is the one I'd be considering is maybe the 155 by 165 and the 135 by 125. 550 is a little bit on the high side. I really don't want to pay more than like $5 for this trade. I think the nice thing is at least we can get to the expected move and get us paid on it. But the trade I'm going to take for pinch point, if I took it to be a debit. So I'm not sure what trade you're in. We're looking at. All right. Final thoughts here to wrap up for daily profit plan today. Broke wing butterfly is in for daily profit play. It's out to the 26, pending one also that's kind of stacking up at the same level. This one is like a 15 delta. This one's a 13 delta. I didn't get a trade filled for today. That's okay. I'm still, I don't know. I'm just going to wait. I'm going to wait and see how the day plays out. It's been a bit of a nothing burger on the day, and that's okay. Had I done a 15 to 20 point dead zone, maybe, but if we just end up staying sideways for the day, just watch your levels here. I'll say this, watch your 50% ATR. If we bounce there, don't be surprised. If we hit, maybe this gap fill, if we bounce there, don't be surprised. So maybe I can sneak in a trade for the day, but couple key levels today, 6,600, right around a round number and a positive negative gamma zone. And this 50% ATR, if we bounce there, I could see that being an opportunity. So that 30. So, okay. So if you're buying the 130 put, selling the 125, are you right on that? So if you're buying the 160 call, selling the 165 call, that should be setting up as a debit. That's a debit spread, what you're doing. So the easier way to think about that trade is you're buying the 130 put. Let me go back to the chart here. So if you're buying, so current price is right here, and you're looking at buying the 160 call, and then above that, you'd be selling. So buy the 160 call and then sell the 165 call. And then down here, you would be buying the 130 put and selling the 125 put. Okay. Those two trades together, that's two debit spreads. So this is two debit spreads. All four legs together should be a debit. So if you're putting in a 235 credit, that's not going to be the fill. It should be a debit spread. So if you're getting an error, it might just be because you're trying to get it filled for a credit versus a debit. That'd be a debit spread. Yep. These are both debit spreads. Okay. One sec. Lawnmower today. All right. Anything else for today? So I didn't get the trade that I wanted on daily profit play. That's fine. I'm not going to chase it right now at 11 in the morning. My window to be right was early on. The market makers, despite the little slide this morning, it has been good enough. The plus minus on the day, we opened up. We've gone a little bit lower, but not a ton. I mean, that's 20. We're down to 07. We moved 13 points.